But what's the implications, if you will, of the money running out for more and more of these buybacks?
Right, the buybacks were announced about a year ago in multiple stages, right in the depths of the coronavirus pandemic. But since then, the company has burned through roughly $20 billion of the allotment, and let's be fair, it was extremely affecting in pulling shares out of a deep corona slump. The stock more than doubled. It's trading near a two-decade high. We have calculated that for every billion Masayoshi Son spent buying back his own shares, he's added more than $6 billion in value to the company. The problem is that buybacks are already losing power to lift shares, and March is really the point in case. The company spent about $10 billion on repurchases, but ended up losing $11 billion in valuation. Now there's only 10% of the allotted capital left, and that's likely to run out in the next couple of months. So without that wind at its sails, we're probably going to see SoftBank's, famous corporate discount begin to reemerge.
On May 12th, so could we see another buyback being announced then?
It's certainly possible. The way Son announced the current buyback is that it came in 4 tranches, and pretty much every month he was announcing another $500 billion buyback, almost never letting the well run dry. So there's certainly a segment of the market thinks that he will do this again. The only problem is that the earnings are going to be absolutely stellar this time around. The company is going to record the biggest net income for any Japanese company in the history of business. Its Vision Fund business will have its third quarter of record profits thanks to the Coupang IPO. So I don't know, some might want to stagger the good news a little bit. One thing for sure is that SoftBank has plenty of cash to spend. I mean, they have over $40 billion in cash and equivalents sitting in their balance sheet.
We're also seeing investments like DoorDash, Coupang doing pretty great, right? So is that really supporting the share price performance when it comes to the Vision Fund business as well?
It certainly has helped. I mean, considering that how negative news in the business were such an anchor, a drag on the share price. We're talking WeWork, Oyo, and some of the more funny missteps like WAG. Now, the question is whether these record profits can really continue. There are a few more large IPOs in the pipeline. We have Grab becoming public, Tokopedia, Didi might list, even WeWork is going to find a way out. But probably none will deliver the kind of return that Coupang managed to do this past quarter. And of course, if markets become less receptive to take IPOs, SoftBank's portfolio of over 160 companies, most of which are private, will look a lot less enticing to people considering SoftBank shares.